Global shares were again choppy overnight after further negative sentiment mixed in with a little bit of good news. This cocktail meant the S&P showed small gains early this morning while other indices dropped. First with some good news. Schering-Plough, sponsor of Farmgate, announced they would be taken over by Merck & Company. It looks like we may see some mergers in the drug industry this year after just 2 months ago Merck and Wyeth merged. The competition will be on. More negative news came from the World Bank, which said the global economy is likely to shrink for the first time since World War II and trade would decline by the most in 80 years. On the commodities front, oil rose steeply yesterday to around $48 per barrel after there was speculation that OPEC may cut their production for this year. A low New Zealand dollar and high oil prices mean we may see higher petrol prices at the pump later down the track. Last week was a big week for central banks. We saw talk from the Chinese of more stimulus, more measures in the UK, drops from the Europeans and a halt from the Aussies. Now the focus comes on New Zealand and our OCR announcement later on this week. The market is split between a 50 and 100 basis point cut, but we still maintain a fast OCR drop down is appropriate with the current volatility in the environment. As the world comes to grip with the recession, our own outlook is looking fairly weak. Our major trading partners are facing big declines in growth. Our biggest, Australia, just announced an unexpected decline in their growth, so this will have an effect on us. We are unlikely to see growth in our own economy until 2010. All these pieces suggest a quick rather than measured drop down will have the most effect. In currencies, we have taken a tumble, now trading at under 49.5 cents to the US dollar. After a few weeks of decline, beef markets showed a good turnaround this week with both scheduled and international prices rising. Some of the big export countries of the world have been faced with tough drought and ongoing price slides like us. These two factors have disheartened farmers into culling stock, which may go some way in rationalising the big global supply of beef down the track. Last week I mentioned that beef exports from Brazil were down 35% in January alone, a huge number. This supply may take some time to unwind. Demand is still weak from our major importing countries, so an easing New Zealand dollar will go some way to hold current prices.